Market overview. The U.S. stock market continued its record-breaking rally on September 19, 2025. With major indices closing at fresh all-time highs, the market momentum was fueled by the Federal Reserve's recent rate cut and optimistic economic projections. Dow Jones Industrial Average gained 172.85 points, 0.37%, to close at a record 46,315.27. S&P 500 rose 0.49% to settle at 6,664.36, marking another historical high. Nasdaq Composite advanced 0.72% to finish at 22,631.48, led by strength in technology stocks. For the week, all three major indices posted significant gains: S&P 500 plus 1.2%, Dow Jones plus 1.0%, Nasdaq plus 2.2%. Source: CNBC. September 19, 2025, 4 p.m. EDT2. Key movers, top gainers. Company ticker, exchange change reason. Brighthouse Financial BHF, Nasdaq plus 26%. Acquisition talks with Aquarian Holdings Group at $65, $70 share. Apple AAPL, Nasdaq plus 3.2%. Strong global demand for latest iPhone release. Tesla TSLA, Nasdaq plus 2.2%. Broad tech rally following Fed rate cut. SolarEdge Sedge, Nasdaq plus 4%, 24% weekly. Fed rate cut reduces borrowing costs for solar projects. ASML, Nasdaq plus 1%. Bank of America upgrade on NVIDIA Intel deal benefits. Top losers. Company ticker, exchange change reason. Scholastic SCHL, Nasdaq minus 11% wider than expected. Q1 loss $2.52 versus $2.13. YOY. Orla Mining, Orla NYSE minus 7%. Newmont sold its stake in Orla for $439 million. United Parcel Service ups NYSE minus 0.3%, downgraded by BMO due to macro challenges and ending of de minimis exemptions. Dollar Tree DLT are Nasdaq minus 8.4%, profit forecast below estimates due to tariff impacts. Sources: CNBC, September 19, 2025. Reuters, September 3, 2025. 3. Sectors and industries. Best performing sectors: technology services, plus 1.10%. Market cap, $19.89 trillion, led by Apple and semiconductor stocks. Electronic technology, plus 0.57%. Market cap, $16.75 trillion, boosted by AI and chip-related companies. Utilities, plus 0.46% yield. 3.8%, benefited from rate-sensitive investors seeking yield. Worst performing sectors: energy minerals, minus 1.45%. Yield, 4.53%, facing pressure from demand concerns. Retail trade, minus 0.31%, impacted by tariff concerns and consumer spending shifts. Health technology, minus 0.32%, mixed performance amid regulatory uncertainties. Source: TradingView, September 19, 2025. For economic and policy drivers, Federal Reserve policy. The Fed cut interest rates by 25 basis points on September 17, 2025, moving the federal funds rate to 4.00% to 4.25%. The dot plot indicated 2 additional rate cuts are likely before year-end. Fed Chair Jerome Powell characterized the move as a risk management cut, amid concerns about the labor market. Economic projections. GDP growth. Median forecast of 1.6% for 2025, up from 1.4% in June. Unemployment projected at 4.5% for 2025, unchanged from June. Inflation. PCE inflation expected at 3.0% for 2025, unchanged. Labor market. Job openings fell in July, suggesting softening labor conditions. Unemployment rate reached 4.3% in August, the highest since October 2021. Geopolitical factors. The Trump administration is considering a $550 billion investment fund to boost U.S. manufacturing in sectors like semiconductors and critical minerals. Trade policy changes, including the elimination of de minimis exemptions, are affecting companies like Upsource's Federal Reserve. September 17, 2025. CNBC, September 19, 2025. 5. Expert and Analyst Insights Market Strategy Outlook. Mark Hackett Nationwide. While September has historically delivered pullbacks, this year, S-Market has defied that pattern, climbing 35% since March with strong technical and fundamental tailwinds. Still, with the S&P 500 trading at 22x forward earnings, a period of consolidation would be healthy. Denise Chisholm Fidelity. Rate cuts in a non-recessionary environment have historically supported stocks. Homebuilders are particularly well-positioned, given low valuations and sensitivity to rate cuts. Ulrich Hoffman Burchardi, UBS. A Fed easing cycle in a non-recessionary environment has historically helped support stocks, and we see further gains underpinned by AI earnings and consumption. Historical context. Adam Turnquist, LPL Financial, noted that while the second half of September is historically weak, the lack of any hawkish surprises and the restarting of the rate-cutting cycle could be enough to offset seasonal headwinds. The Russell 2000 ended its second-longest streak without an all-time high, 967 days, on September 18th. Risk assessment. Ray Dalio Bridgewater warned that gold and non-fiat currencies will become a more important store of wealth as U.S. debt mounts, recommending 10% portfolio allocation to gold. Sources: CNBC, September 19, 2025. Fidelity, September 2025. MarketWatch, September 19, 2025. 6. Source and timestamp. Summary information, category primary source publication date, time market performance, and key movers. CNBC, September 19, 2025. 4 p.m. EDT Federal Reserve Policy, CNBC, September 17, 2025. 2 p.m. EDT Economic Projections, Federal Reserve, September 17, 2025. 2 p.m. EDT Sector Performance Trading View, September 19, 2025. Analyst Insights Multiple Sources, September 17 to 19, 2025. This report synthesizes information from trusted financial sources, including CNBC, Reuters, Federal Reserve Publications, and MarketWatch. All information is current as of market close on September 19, 2025.